What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Lindner, and we have a dip in the price. It is a pretty depressing day for Bitcoin, but we're going to go through all of the charts. We're going to go through an unpublished post that I have for Bitcoin Magazine Pro. And so you guys, as subscribers to Bitcoin and Markets, you get a special sneak preview of that. So let's go ahead and just jump right into it. Bitcoinandmarkets.com is the homepage, so check that out. Bitcoinandmarkets.com. There's, you get your free weekly newsletter, you get premium content, you get member content that is like the price forecast competition. So check out all this stuff over there on bitcoinandmarkets.com. All right, let's jump into the live chart actually first before we go to my post. And you can see this sell-off over the last couple days has just been horrendous. I remember talking back here. This was last Friday, the 28th of June. That was when I was like getting really bearish and price went up. Now in this dip, even though it's lower, I'm less bearish, which is funny to say. But the reason for that is because of this RSI. There's also several other things that we'll go over here in a second. But the sentiment is extremely bearish. Could this go lower? Yeah, it could. This candle is a very nice bottom candle. So if it closes here or maybe even a little bit higher, earlier today it looked like it might be going positive for the day. So if we close here or a little bit higher, that would be an amazing bottom candle. And overnight, I put in the Telegram and on Twitter is like, this is time to buy the dip, guys, right here. So we will see how that turns out. All right, let's get into this unpublished post that I have, and we'll go into it. It is off of a similar thread to how my premium posts go on bitcoinandmarkets.com. Short-term, medium-term, long-term forecast. So let's run through this here. Current situation in Bitcoin. We have, let me zoom in so we can get a better picture, a better look at these images, if that works. Okay, so we did set a 27% correction on that dip. Bitcoin hits the last line of support under the 200-day moving average. And actually, there is one more line of support if you want to say the ETF launch is another line of support. That's about $47,000. But you can see it just looks very, very weak. Bounced off this line of support and now is trying to rally. We'll see if it can do that. But this is the current situation. So the current correction has reached a negative 27% from the new all-time high of 73,794 set on 14 March. Price is currently under the 200-day moving average for the first time since October of 23. Anytime Bitcoin is below the 200-day moving average, it is a great buying opportunity. We are also forming a bullish divergence that will lock in with the next positive candle. Price tested structural support formed in February after the first period of the ETFs. The next lower support is the ETF launch level of 49,000. So again, you can see this period over here. Is my cursor coming through? Yeah. It's not coming through. But over there by the label for the 20-day moving average, can I highlight this? There it comes through. Over here in February, this little plateau is what is providing this support here. And the next lower level is going to be this ETF launch. And that is about 49,000, I think is what I said there. Okay, so let's go on here. This is the first 25% plus correction in 427 days, the longest ever without a 25% correction in Bitcoin history. And this was Caproli put this out this morning. And let's see if I can get this nice in the, can I get it all the way in? I had to zoom out a little bit. Sorry, guys. So you can see the Bitcoin price going up here. These are the days since a 25% correction. The previous longest one was 364, and it looked like we were never ever going to get back to that. That was at the kind of the birth of Bitcoin. But now we are, we just hit this 427-day period without a 25% correction, and that just ended. So this is very healthy for Bitcoin. Bitcoin has a lot of these corrections, as we'll see here in just a second. So this cycle is also still well ahead of schedule based on the previous all-time high. So this is important, previous all-time high. There is some fudge factor in this particular metric if we consider that the prior cycle was artificially suppressed due to leveraged DeFi shenanigans and FTX's paper Bitcoin fraud. If we extend last cycle's high to 100,000, as some suspect should have been the blow-off top, we get a green line for this cycle right in the 60% pocket, matching previous cycles. So you can see here on this one, the green is the current cycle, but it's based on a suppressed all-time high from last cycle. If we would move that all-time high from this orange up to 100K, then this green line would fall back right into this, right where it's supposed to be. So it's amazing how these cycles are timed out, and they all pretty much match each other. That's how I can say this is another piece of evidence that we should have hit 100,000 last time. But we did not, because this is, if this were normalized, we would have hit 100,000. So that is interesting. We are not behind schedule. We are not ahead of schedule, really, but interesting here on this one. However, we can look at it a different way. We can look at performance based on the halvings, and this is the worst performing cycle yet. This could mean that we are set to make up ground in the next several months. So this one was from Pierre Rochard. He tweeted this, or at least is where I saw it from. And you can see this. I don't know, actually, if you can see this orange way down here. Let me pull up that tweet. That will be easier. 1 second, guys. Pierre Rochard. And share this tab. So he tweeted this out, and then he zoomed in on this bottom corner, and you can see this orange did just tick down below this red one, which I think that is the 2016-2017 cycle. So, this is the worst performance we've had post-halving out of any cycle yet. So that's another way to kind of normalize for what we're seeing. Okay. Where is the selling coming from? The consensus speculation is the price dip is coming from the German government dumping approximately 10,000 BTC and the pricing in of Mt. Gox creditor distributions. Pricing in of Mt. Gox creditor distributions. However, the Ethereum price action seems to contradict this view. Ethereum is not affected by either of these factors, and even has a potentially bullish catalyst in the launch of the spot ETFs, which could be, any week now. Maybe definitely by the end of this quarter, maybe even by the end of this month in July. We'll see how that goes. People were talking about a July 4th launch, but that did not happen. But yeah, they have a bullish catalyst, and none of this dumping. Yet they're falling more than Bitcoin. ETH dropped 31% from its high on 12 March. Of 4,093. Since the temporary bounce high on 1 July, Ethereum is down 20% to Bitcoin's 16%. We'll take a look at that here in a second. The ETH BTC pair is down more than 7% since the recent high on 28 June. So ETH is selling off way harder than Bitcoin. At least it looks to be about 20% harder, 25% harder than Bitcoin is. All right, so here is the Ethereum chart. You can see from the top to this bottom was 31%, where Bitcoin is only 27%. And then in this most recent sell-off here at the tail end, down here, that's 20% to Bitcoin's 16%. So ETH is selling off harder than Bitcoin, despite not having any of these same bearish or dumping of supply onto the market. So is the dumping of supply actually matter? Is that what's actually moving the price right now, or is it just a bearish period, a reset, a correction in the market, and we will go higher from there? That would match better than the saying that Bitcoin is uniquely being dumped on right now, where Ethereum should be outperforming Bitcoin, but it's not. Overall, this is a painful sell-off for Bitcoin, but it is not out of the ordinary. it is extremely difficult to hold Bitcoin long term, contrary to how many people from the outside picture it. Also, of importance is the number of days without a 25% drawdown shows that Bitcoin is becoming less volatile as it matures. For years, Bitcoiners have been saying that as Bitcoin becomes more widely adopted, it will naturally become less volatile. And that finally appears to be playing out. So that's a good thing. All right, let's get into the near term, medium term, and cycle forecast. So, near term forecast. My near term forecast covers the next 2 weeks. As you can see below, there is massive resistance above the price with the gray rectangle showing the cluster of the strongest resistance. Price is already bouncing nicely off the lows and edging near the 200-day moving average. Once we break that, it's on to the 20-day. And I'll just show this chart and then tell you guys, hey, if you're watching this on YouTube or Rumble, like, comment, subscribe. Check out the Telegram, t.me/Bitcoin and markets. Check out bitcoinandmarkets.com. This is the same type of premium content that I put out there. And I have my near term, medium term, and long term forecast for Bitcoin. But okay, so you can see this cluster of resistance, 65,000 to 66,000 in this gray box where all of these moving averages are coming together. That's the 50-day, the 128-day, the 100-day, the 20-week. The 200-day or the 20-day and the 200-day are kind of down here. Those will be the first ones that we break as we move higher. Okay, but there is that cluster of resistance. And I left this gray box on multiple charts so you can kind of see where we're going here. Okay, the size of the 4th of July flush is historic. It was the largest day of liquidation since the FTX collapse in November of 2022, bigger even than the August 23 flush, providing very fertile soil for a bounce to take hold and rally into near-term resistance levels. So you can see this green came all the way, or this red liquidation came all the way down here, and that is the biggest since the FTX. We need these liquidations to go higher. A lot of times people say, we have to liquidate all the longs before we go up because the market picks the most pain possible. And right now, that's what people are feeling out there. They're feeling pain. I've seen a lot of rage quits from the altcoin side too on Twitter. A lot of people are like, this is, a fool's game. I'm out. And they're a .eth on Twitter. So there is a lot of wreckage going on and a lot of people exiting the space. Of course, retail investors are not what's driving this cycle right now. It is institutional investors. And when institutional investors see something like this, they see something like oversold, like we're going to take a look at, they're licking their lips, ready to get into this market. So, all right, let's continue. The 4-hour chart is also looking like a bottom with bull div off of extremely oversold conditions. I left the gray rectangle on there for reference. Okay, so here we go. The 4-hour, you can see this dip where I was getting all bearish last week, but now I'm less bearish, but it's worse dip. But we do have a bullish divergence here from the RSI, and this is where that cluster of resistance is up here at 65 to 66,000. Okay. For the short-term forecast, I expect the bottom is in based on liquidation levels, bullish divergences off extremely oversold conditions, and fitting the mold of a typical bull market correction. The 200-day will be the first major level to overcome at 58,500, followed by the 20-day at 62,000. Price may threaten the cluster of resistance at 65,000 next week, but it might take 2 weeks. I should have put that in there. Downside risk is limited due to oversold conditions and the overestimation of net selling pressure. I saw there was a couple big buys. I haven't checked out what Mr. 100 is doing. Let me see if I can pull that up quickly. All right, so today he had some big buys. Let's see, 100, 100, 100, and then almost a 400 Bitcoin buy all today. So let's see, that would be 4, 5, 6, almost 700 BTC bought by Mr. 100 today. That's pretty big. And you can see he's had some positive buys down here as well. Of course, we always have the traditional demand out there from MicroStrategy, Tether, MetaPlanet, all the hardcore holders, people buying the dip like myself and followers there on Twitter and on Telegram, deploying the last amounts of capital that we have. I mean, don't overly invest in Bitcoin where you're going to have to cash out in the near future. You always want to have a 5-year time horizon on your Bitcoin buys. But yeah, people were buying this dip aggressively, and you can see that here. Okay, let's go back to the post. All right, medium-term forecast. My medium-term forecasts cover up to 6 months. This nicely takes us to the end of the year and post-U.S. election. The wild card in this time frame is the possibility of recession. It is still my position that we are likely to enter an official recession in the second half of this year for the myriad of reasons I've stated in previous posts, specifically calling the current environment a pre-recession period. So, of course, let's say we start recession in the third quarter, right? If we start the recession in the third quarter, then it's not going to become an official recession until 2025. Okay, until we get 2 consecutive quarters of negative GDP growth. So, yeah, the start of an official recession is likely this year, but it won't be, put out there as being official until 2025. Okay, pre-recession periods are dominated by stocks doing very well, bond yields generally falling, and safe haven assets like Bitcoin and gold getting bids. All those things have happened over the last year. The current pre-recession period is being buoyed by deficit spending in the US at a rate of 1 trillion every 90 days. The delay of the recession could get more support by releases from the SPR in the lead up to the US election. So this is what's pushing off this recession, and probably would have already been underway if not for this type of deficit spending. That being said, Bitcoin's market should not be affected negatively by macro events until an acute market crash, if and when that comes. Okay, so here is the next chart. This is S&P 500 versus Bitcoin. And you can see they pretty much track together, tops and bottoms, even within a couple weeks of each other. But we are diverging right now. The stock market is ripping and Bitcoin is dipping. This happened also back in 2019 at the beginning of this bull market. If you remember, the bull market ended at the end of 2018, was going higher. Then COVID kind of cut it short right here, but that is unlikely to reoccur here this year. What we have here is the stock market going higher, Bitcoin initially dipping and then coming back to catch up. So here we have Bitcoin initially dipping, and we possibly could go up. Okay, next one. Bitcoin has diverged from stocks for the first time this bull market, resembling 2019. Back then, Bitcoin reversed and caught up to stocks, followed by the market singularity of the COVID crash, which is unlikely to reoccur. Okay, we covered that. The Bitcoin 6-month heat map from CoinGlass is showing more liquidity down to 50,000, but not a lot between the current price at 56 downward. So here you can see current price right here. We have liquidated all of these longs, and this is the next batch of liquidity down here at 49,50,000, but there's not a lot in this gap to pull price down continuously. All right, let's take a look at the 3-month heat map. And here we have the 3-month heat map for Bitcoin. And this is just Binance Tether pair. But these are very, very similar with all exchanges. And on the 3-month, you can start seeing this top number here, 72,000, really glowing. And some of these levels between the current price and up there are starting to fill themselves out, which will act as a magnet for price. And below here, there's nothing really you can see at all down to below 50,000. So no real big longs have been opened up within the last 3 months at that level, obviously, but that is where we don't see any of those liquidations. They all are only on the 6-month chart, not on the 3-month chart. Okay. Zooming in yet further to the 1-month heat map, we can see all of the liquidity above the price, and look at all this liquidity glowing. Traders want that. People want, the whales want to liquidate and get the liquidity. And so that is very, very juicy, delectable sight above the price. So price could really rally quite hard to just snag all of those levels all the way up to 72,000. Lastly, for our medium-term forecast, let's look at the Fibonacci retracement and extensions. As you can see, the golden pocket between 61.8 and 66% retracement aligns well with the top of our resistance zone discussed above. The 1618 extension is up to 86,000. Therefore, the medium-term forecast for the end of the year is at least 86,000. My previous forecast honed in on 98 to 102 due to cycle patterns, post-halving rallies, and projected returns. The 100K level is clear psychological resistance, so will be very hard to break this year. So the range for my medium-term forecast out to the end of the year is 86 to 100. And let's take a look at this chart. You can see this, the gray rectangle I left on here, the golden pocket, and that aligns with the top of that resistance level, hitting the 61.8 retracement. And then going up here to the 1618 would be 86K, which is typically what we see rallies go to. All right, let's continue on to the cycle forecast for Bitcoin. My cycle target for most of the last 2 years has been an ultimate top in the 200 to 400K range. I have narrowed my time frame to roughly in the middle of next year due to halving timing. Bitcoin has a very clear 4-year cycle that tends to top in November or December, followed by a cycle bottom 1 year later in the same months. And if we go to we don't have to do that. Let's go down here. So you can see top in November, bottom like December, January of 2015. Then we have the top in December of 17 and a bottom around December of 18. An ultimate top in November of 2021 and an ultimate bottom in November of 2022 with the FTX collapse. So November, December going up and down is very, very pivotal. All right. The pattern, this pattern slightly changed in 2021 with a double top. The first top may have been driven by this halving cycle, and the second by seasonal factors. If that is the case, we can expect another double top this cycle due to halving continuously moving earlier. So when the halving was, this was July, this was May, and this was April. So the halving is moving earlier and earlier. Maybe pulling that influence of the halving forward. So this is why we would have a double top here in April and November. Do we have another double top in, May, June of 2025, and then December of 2025? We could definitely see that because we have two factors here. We have the halving cycle and we have the seasonal cycle with the November, December timeframes. So something interesting to watch and keep an eye out for. Let's see, did I read all that? Yep. I will be watching and updating highly accurate timing metrics like the pi cycle top in future posts. Below, I highlighted a period that very closely represents where we are today with red arrows. We are obviously far from a cycle top. So a lot of people are thinking this is the cycle top. We're entering a bear market now, which is not the case. The pi cycle top here, it looks a lot like 2017. Not so much here like 2019, but 2017 for sure. And yeah, so as we start going higher, the top, this green line is at 100K. So that would be, hitting the top of that pi cycle. That's the 350 DMA times 2, the dollar value times 2. So anyway, I really like this pi cycle top, and it has been within like 3 days every single time of calling the top. 3 days. So I will be watching this, and you can tell we're nowhere near a cycle top. Okay, in conclusion, Bitcoin is oversold on most timeframes and is behind on the halving cycle timeline. Near term, I expect price to challenge resistance levels above price, getting as high as 66,000 in the next 2 weeks. By the end of the year, the bull market should be obviously in high gear with levels of interest at is that the best way to say it? Levels of interest. Oh, I did put that. I read it wrong. Levels of interest at 86,000 to 100K. Cycle timing has two driving forces: the 4-year cycle from the halving, which is getting earlier in the year each cycle, and the seasonal November December peak and bottom timing. Therefore, there is a possibility that we will have another double top this cycle in mid to late 2025 between 200 and 400K. So that is that post. Let me jump out to see if there's anybody making comments. We'll pause it on the website. Comments. Dex Invictus, John Delaney. What up, Ansel? I can't stay for long, but nice to see. Okay, thank you, John. Good to see you. Let me go into Telegram. See if anybody is chatting up in there. We've had some good conversation in Telegram. We've had some posts on demographics. We've had some posts on price, of course. And we are getting some good discussion. So I appreciate you guys taking part in that. If you guys are watching on YouTube or Rumble later, like, comment, subscribe down below. Check out the Telegram and also, of course, bitcoinandmarkets.com. Appreciate you guys stopping by. And that's going to do it for me today. Have a good weekend, and I'll see you on the next one. Bye.